Hey, Magic Mortgage Mike here, educating first-time buyers on my YouTube channel. We're going to pick a topic out of the hat. We got a deck of cards. Each card has a topic on it. 8 of hearts. Today's topic is 1099, self-employment, and W-2s. So we'll talk about income today. So there's 3 types of incomes. There's your standard W-2, which is if you work for a company or a regular employee and they give you a paycheck, they take the taxes out, and they give you pay stub at the end of the week or every bi-weekly or however you get paid. Then if you're self-employed, you're going to have business returns. You may not have pay stubs. It gets a little tricky. And you're either going to give yourself something called a K-1, which is like a W-2 for self-employed, or you can give yourself a 1099 as well. 1099 is you may work for a company that gives you a check without taking the taxes out. So your responsibility at the end of the year is to give all your 1099 income to your accountant so they can deduct all your taxes, take expenses out, and that's how you pay the government basically. So it gets a little tricky. So the easiest level again is W-2 employee. Let's say you're a teacher, a fireman, a cop, a plumber. You're going to get a W-2 at the end of the year. That's the easiest way for a bank to calculate your income because it's a structured payment. It's not going to change, and we know what your income is going to be. 1099 employee, let's say you are a, pharmaceutical sales, for example, and you work for a company, you go out, you make sales, they give you a check monthly, weekly, whatever it may be, but they do not withhold taxes. They're going to just give you a check and issue you a 1099 form at the end of the year. Your accountant's going to take that, deduct all the taxes, give you expenses. So the problem with 1099 income is you might come to me and say, hey, I make $100,000 a year, I want to buy a house. After your accountant's done with that $100,000, you're going to have mileage and cell phones and subscriptions and uniforms and a home office and mileage, everything. That $100,000 is going to be chopped down to $50,000. So really what you're doing is you're telling the IRS, please don't tax me on $100,000. Tax me only on the $50,000 because I had a lot of expenses. Well, if that's what you're telling the government, that's what we're going to be able to use for income. So we're not going to be able to use $100,000, which is why when people call me and say, hey, I make $100,000 a year, how much can I afford? I always ask them for their income documents. And if you're dealing with a loan officer that's not asking for your income documents up front, you're getting a bogus pre-approval, and I would walk away from them very fast. Lending is very tight still. There's a little bit of loosening, but it's still very tight, and it's rough getting a mortgage. So you definitely want to get all your income checked up front. I would say the same thing with self-employment. We generally will need 2 years of business returns. There's some programs that can use 1 year, but you're going to want to have 2 solid years of self-employment if you of income reported to the IRS. So 2 years of tax returns. And I could get a lot deeper than this, but that's general. So to make it very basic and cut it down to 2 seconds, if you're a W-2 pay stub employee, you're going to have a very smooth ride getting a loan. If you're self-employed and own 5 properties and, working for a family member, it's going to be a little more difficult, a little more hairy. You're going to need to invest a little more time and get the bank what they need right away. I'd be happy to get you pre-approved. We're super fast here at Movement Mortgage. Give me a ring, 516-652-3073. If you have any questions, write a comment below. Please subscribe to my channel. Magic Mike Natty here, bringing you mortgage tips for first-time buyers.